Welcome to the Bourbon Friday Show, where every week we take a short break, we try a new bourbon, and we meet somebody from the St. Louis startup community. I'm Nick Niehaus, your host, and today I'm going to be interviewing Andrew Smith, who's the Vice President of Entrepreneurship and Innovation for the St. Louis Regional Chamber. Andrew?
Thanks.
Yeah,
thanks for having me on.
us.
This is fun.
Yeah, good. Well, I want to start off by just, give us a kind of a quick description of what the Chamber does and kind of all the different stuff you guys are involved in, because I know you do a lot.
Yeah, so we do quite a bit. We are basically the voice of the business community, the private sector, for economic development and workforce development purposes for the greater St. Louis region. So we represent 15 counties, right, both sides of the river. And we have a number of initiatives that we work on really to promote a pro-business climate, to promote diversity, equity, and inclusion within that climate, to address some of the key issues that we think are facing the community. We have a strong public policy arm where we lobby in both Jefferson City and Washington, D.C. And in my world, we work directly with entrepreneurs, with startups, and with the venture capital community, try to put those groups together, try to tell the story of what's happening in St. Louis, outside of St. Louis. And then we also work on big transformative projects that we think have the potential to really change the whole perception of the region, like Hyperloop.
Wow, okay.
Right?
There's a lot there, yeah.
Lots
so
of
we
stuff.
have a lot to talk about today. It's good. So start off, you mentioned 15 counties, right? So that sounds like it goes pretty far outside of just downtown St. Louis. So how far out do you guys kind of work with?
Gosh, I mean, we've got the whole Metro East area that we work with.
Sure.
So, Madison County, across the river in St. Clair, and all of them on the Illinois side.
Okay.
All the way out beyond St. Charles.
Gotcha. Okay. It's pretty region. Okay.
It is.
So tell me about your specific role. So entrepreneurship and innovation, obviously, again, pretty broad, obviously, but what are some of the projects that you're currently working on?
Right. So, I think the one that is probably most relevant to, what we're talking about today is the work that we do investing in this community, right?
Okay.
And we're pretty unique among chambers of commerce in that we actually have a venture capital arm.
Oh, okay.
It's called Spirit of St. Louis Ventures. We had set aside operating capital to catalyze investment in accelerators and in seed funds.
Oh, awesome.
So we were one of the first investors in Stadia Ventures, in 630, in 630 Cyber, in Prosper, which is now Brazen, in the Yield Lab, Ireland.
Wow. Okay.
So our we've got skin in the game.
Yeah.
Which makes it a lot more fun.
So you mentioned that a lot of chambers don't do that. So is this kind of is it something that's happening in more chambers now, or is this something you guys are just kind of?
I'm not aware of any other chambers that have done it to the extent that we have. There might be some that have got accelerators that they've put some money into, or they provided in-kind services to, but I don't think anybody has taken it so far as to be an actual venture investor.
Gotcha.
Now, the other thing we've done just this year, in partnership with Twain Financial and Cultivation Capital, we launched Spirit of St. Louis Fund 1, which is an SBIC fund. It's a $5 million fund, so it's relatively small. But we are, in that fund, we're investing between $150,000 and $300,000 in companies that are kind of in what we call the valley of death.
Okay.
Right? Which is basically what happens when companies get an initial grant of some kind. Maybe it's an Arch grant, or maybe they get $50,000 from an accelerator. Then they come back out to the market. Their business models change. They've got to pivot. They've got to do something else to grow. And historically, there really hasn't been local capital available to that.
Yeah,
market
that's been an issue.
Right.
Sure.
So we're trying to help address that gap.
So are there any stats tied to that? Like how many companies die in this valley? Is it a pretty significant number? Or?
Yeah, it's interesting because we did the research on that about a year ago. Was when I first got here. We worked with a guy named Dane Stangler, who used to be the head of policy at the Kauffman Institute.
Oh, okay.
And is now with Startup Geno. Phenomenal guy, like world-renowned researcher.
Sure.
And what we found was, St. Louis over the last 10 years has done a better job, I think, than arguably any city in the country outside of, the big hubs like the San Francisco or New York or Boston, of generating company formation and capital formation at the top of the funnel, right? The earliest stage of company formation.
Sure,
in fact,
real tiny companies.
Yeah,
right?
yeah. Like in fact, what we found was that if you were an entrepreneur who had a pretty good idea, right, and you're presentable and can handle yourself in a room, you actually had a better chance of getting funding in St. Louis than almost any other city in the country.
Really?
Which is amazing, right? And that's a great thing. But then, the other thing that we found was capital markets at that stage are really inefficient.
Okay.
Right? So like big coastal funds, sitting on billions of dollars in assets, they have so much opportunity in their own backyard that they don't really have to look beyond that. And so
Sure.
they don't, because it's harder to manage companies that are, 1,000 miles away.
Yeah, makes sense.
So, that's a point where proximity to capital really, really matters to entrepreneurs. And we've focused on trying to just generate as much as we can, as much interest as we can.
Sure.
In getting money into the system at that stage.
Okay, so kind of a PR type of approach, I guess, for companies around there?
I mean, it's PR, it's direct investment.
Okay.
It's using our convening power as a chamber to put entrepreneurs in front of potential clients.
Okay.
Right? I mean, I'm an entrepreneur by temperament, by background. I spent
Sure.
most of my life actually being an entrepreneur.
Okay.
And any entrepreneur, I think, will tell you, I mean, raising money is important, right? One of the things you must
Sure.
do.
Need
Getting
money.
talent's really
Yep.
important, but at the end of the day, help me find customers.
Yeah.
Right.
Of course. Yeah.
And I think the chamber is really well positioned to do that because we are the primary convener of big corporate St. Louis,
Sure.
right? So we've got companies like Ameren and Purina and Anheuser-Busch and MasterCard and Edward
Yeah.
Jones,
Yeah.
right, that are on our board and that are really engaged in our agenda.
Yeah, that's amazing.
So to the extent that we can expose those investors
Yeah.
to innovation happening in the community, it's a really, really good thing for everybody. Everybody wins.
Sure. That's awesome. So it sounds like you have a pretty cool job.
Yeah,
a lot
I do.
of very
I love
interesting
my job.
aspects to it. So I want to go back a little bit in your career because we were talking before the show about, you've been in entrepreneurship for a long time. So tell me kind of how, you've been in this role for, you said, about a year and a half now. Okay. Tell us, before that, what were some of the other things you've done?
Right. So, we were talking before the show about, early stage stuff.
Yeah.
I graduated from college in 1994 and I thought I wanted to be a writer.
Okay.
So I moved to New York City.
Makes sense.
Like writers, like aspiring writers do. And then I started applying for jobs for writers. And I got a couple of offers.
Yeah.
But it was like, $12,000 a year in New York City, which gets you an apartment that's about the size of this table.
Yeah.
Right? And I was like, this is going to be rough. I'm going to have a hard time with this. So I ended up instead going to work for a hedge fund. Something totally different.
Sure.
And this was a hedge fund that had a really strong interest in, computer science, right? It was founded by an artificial intelligence expert from Stanford.
Wow.
Internet was just starting to kind of be a thing. And so there were two projects that this bank was incubating. One of them was the one that I went to work for, and that was Juno Online Services, which was a free email company. And it was big for a while.
Sure.
It was kind of like AOL gave out discs everywhere. There are probably, 5 million of them in landfills today,
Yeah, of course.
right?
Yeah.
The other one was, there was this guy in the bank. He was kind of quirky, quiet. Nobody really knew what he did. My job at the time was I was working in the mailroom, because I was going around meeting everybody. And I finally got up the courage to ask him what he was doing, because you'd go in his office and he literally had like books piled up to the ceiling.
Oh, really? His stacks all over the place?
Yeah, like stacks all over the place. It was a mess, and rarely looked up from his computer. And I said, like, what do you do? And he said, oh, well, I'm glad you asked. I've got these books. I love books. I'm trying to figure out how to sell them on the internet. And I was like, okay, good luck with that. This is 94. Nobody's buying anything on the internet.
Yeah.
Nobody can put credit cards in the internet, right?
Sure. Yeah.
People were thinking, are people ever going to buy anything on the internet at all? If they are, it's probably not going to be books. And so
it's hard to imagine that was even the thought. Now we buy so much stuff online, right?
Right.
Yeah.
And so, I was kind of like, okay, good luck with that. And he said, thanks. And, a couple of months later, the head of the bank had the same reaction, I guess, that I did. He was like, well, this doesn't make sense. So he said, if you want to keep doing it, you're going to have to do it on your own. He said, okay, I will. So he took 3 or 4 people I knew, a couple other people in the bank, plucked them up from New York, moved to Seattle, and started Amazon.com.
Man.
And this was Jeff Bezos, right?
Yeah.
I remember, that was my brush with greatness. I remember him telling me, I think people will buy this stuff online. Right now, I'm just kind of emailing people and they're sending me checks.
Really? Oh my gosh.
Yeah.
Well, you got to start somewhere, right?
Yeah,
I mean,
it was the Wild West. Right?
That's crazy.
Everybody was making it up as we went along.
I bet, yeah. Well, I mean, the internet, completely changed the way we do everything now at this point, right?
Absolutely.
Cool. So, I mean, obviously, you started this email company. Mm-hmm. How'd you end up at the chamber? What was the rest of it like?
Winding path. So I was there for a while. We ended up going through an IPO. I went to another pre-IPO media company called iVillage.com, which was a women's network. It's now part of Hearst Media. Same thing. We kind of did our big IPO at the time. Actually, iVillage had the biggest IPO in history, or the most successful IPO in history.
Wow. Okay.
Based on percentage increase, stock opened at like 8, closed the day at 120, something like that.
What?
Yeah, it was nuts, right? It was nuts.
I assume this was before the .com
this
bubble.
Was before the burst. And then I ended up starting my own company with a couple of other people called Diet Smart, which was an online weight loss and fitness customized program. And we raised money for that, scaled it. We actually got it profitable, which back then was kind of a rare thing.
Sure.
Sold it. And then I thought, I'd been in New York for close to 10 years at that point. And I thought, I think I've had enough of this. So I moved back to the Midwest. Ended up starting another business that got venture funding. Scaled that one a little bit. We moved it to Louisville, Kentucky.
Okay.
And then when we got out of that business, I kind of just went back into corporate world for a little while. Like I worked in healthcare, worked at the Kentucky Derby.
Oh, really? Okay.
Yeah, doing
very cool.
Customer analytics for the Derby. But when this role opened up, I jumped at it. I mean, St. Louis is a great town. There's so much happening here, and I mean, it's a really, really fun job, right? I get to work with entrepreneurs and investors all the time.
Sure. Well, and I know, I mean, being kind of in the St. Louis startup scene myself, I mean, it's completely changed in the past even 5 years. I mean, I remember when I was in school, the story was if you want to start a business, you can maybe start here, but you're going to be leaving. If you want any sort of funding, you want talent, all that kind of stuff. So that leads well into one of the other topics for the conversation today, which is the venture capital overview that you guys published recently. And some of the topics kind of came up in there. So why don't we dive into that a little bit? So tell us a little bit about the state of the startup scene and then the venture capital, because I know that's a really big part of companies scaling, right?
So that report looks just at venture funded startups, right?
Okay.
And we know that there's a whole world of startups out there that are not covered in that report.
Sure.
We can get into that maybe later.
Sure.
But I mean, the short version is over the last 4 or 5 years, we've put down as a region about over $1 billion, right, in bets on venture startups.
Awesome.
We're at an inflection point. Right?
Okay.
A lot of these companies now are in the process of scaling. They're going back out for Series A, Series B, Series C rounds. So they're now competing with coastal startups for money.
Okay.
And I think we're at a point where it's, we kind of have to prove the value of the work that's been done. It's been really good work. The good news is when we look at the pipeline, I think there are really, really strong companies out there that are going to validate this ecosystem.
Okay.
When that happens, what we think will happen is we're going to see much more capital come in.
Good.
We'll see entrepreneurs and investors getting money returned to them that they'll then recycle back into the ecosystem. That's the best case scenario.
Gotcha.
The worst case would be if they don't scale, right? We have too many company failures. Then you would have a loss of confidence and maybe some of the talent would migrate out of St. Louis.
Okay.
So we don't want to see that.
Sure. And so we're talking about obviously, bigger exits is kind of what we're looking for now, right? Because I mean, I'm reading through the report, obviously we've had companies that have been growing for a while now, right? So is that kind of what the next step needs to look like, or what do we need to see? What are the indicators that things are working versus not working?
I mean, again, when I think about this, I really do boil it down to exits.
Okay.
Right? I mean,
that's
not to say that continuing to support new startups and directing capital to the early company formation is not important. It is really important, but we have got to validate the work that's been done here. Investors have got to, get some of that money back.
Yeah, sure.
Because once you make money on a venture investment, you want to come back. It's,
sure.
It's like a black
play
table,
again, so to speak.
Right? And entrepreneurs are the people who, we know the data, overwhelmingly says entrepreneurs who are successful reinvest, they start new businesses. Mm-hmm. So that's what we're looking for. We had a big one last year in Confluence, Life Sciences, $100 million exit.
Sure.
Fantastic.
That's awesome.
We need about 5 more of those.
Okay.
Right?
Fair enough. Would $1.5 billion one cover it, or is it about the total amount of money, or is it?
I think it's partly about the amount of money, but I think it's also about branding.
Sure.
And driving the narrative that this is not just a place that tries hard,
Yeah.
right?
Actually produces results.
But
That's
it's a
the
place
key.
that produces results,
Okay.
right? And we're not just a lot of companies get started, but really good companies get started. Companies that can scale and make a lot of money for their investors.
Gotcha. Okay. So where do you think we're at? I mean, do you know of some companies behind the scenes
Sure.
you think are getting close to this, or
I think
what's it
so.
looking like?
Yeah, I mean, and so you're talking to the guy who delivered mail for Jeff Bezos and wasn't smart enough to beg him
Sure,
to go
fair
along
enough.
to Seattle, right? And that's kind of the way it goes, I think, in venture investing. There are always,
sure, yeah.
Things that kind of come out of nowhere. But when we look at the ecosystem, I look at companies like Varsity Tutors, that is really, really doing well.
Oh,
I mean,
for
they're
sure.
raising a lot of money. They're scaling very, very fast.
Mm-hmm.
It's a fascinating opportunity and a fascinating space that they're in. Benson Hill, pharmaceuticals.
Mm-hmm.
There's a smaller life sciences company called Plastomics, just
Okay.
doing some really interesting work out at the Danforth Center. There's Locker Dome, FinLocker,
Sure.
in more of the tech space. Those companies have a lot of momentum.
Awesome.
And we need them to succeed.
Yeah.
We should all be doing everything we can to help them.
Cool. And the reason obviously this is so big is because the investors get their money back. But another one I've heard of is that a lot of the people that were involved in starting the company make their millions, and then all of a sudden they become investors, right?
Yeah.
Cool.
Yeah. I mean, I think the kind of myth about entrepreneurs is like, they want to make money. They want to start a business, make a bunch of money, and then go live on an island.
Yeah.
Well,
no.
I've never met really an entrepreneur.
They're
who's
not that kind of
wired
person.
Like that,
Yeah,
right?
they want to keep doing stuff,
once you
right?
do it, you want to do it again and again and again.
Sure.
So we need them to be successful. We want to validate the work that they're doing because we know if you've been successful once, you got a much better chance of being successful the next time.
Of course, yeah. So what does the average person do to kind of help in this process, right? So if you have a lot of people
Yeah.
that maybe aren't part of the startup scene, but want to see this economic, growth continue to happen, is there a way we can support these companies
Yeah.
or something we can do to get more involved?
I mean, I would say, tell the story.
Okay.
I mean, one of the things that, I'm a Midwesterner, right? I mean, I spent time on the East Coast, but I mean, core, I'm a Midwestern guy. And so I get this, but, we are terrible at bragging on ourselves,
Sure.
right? Like we hate it. St. Louis, I think in particular, has this weird syndrome where we talk about our problems all the time.
Oh, yeah. Yeah.
All the time.
Yeah.
And man, we tell great stories about our problems,
It's true. Yeah.
but we don't tell great stories about our successes. And, I think, if people want to make a difference, share the success stories, right? You see something on Twitter or Facebook, tell people. That's one thing. If you're, working at a big company, be open to doing business with these entrepreneurs. Take the meeting.
Okay.
See if they can help you solve a problem.
Sure. And it sounds like that's part of what the Chamber's doing is helping bring those two sides together.
Yeah.
Right?
It's part of our mission, right?
Cool. All right. Well, along those lines, for those watching, that means you should share this episode, right? Or
Yeah,
just share every single
definitely.
episode because we're always talking about
Yeah.
this stuff. So, all right, very cool. I think this is a good chance to kind of transition. We do have our remaining segment, which is bringing the Bourbon founder himself, Eric, onto the show. And Eric's going to talk to us about what we're drinking this week. So what are we sipping on here?
So this is David Nicholson Reserve.
Okay.
And the reason I brought this on the show today is that at least the way the story goes, in 1843, in the back room of a grocery store in St. Louis, they started producing a bourbon. That store was owned by David Nicholson, hence the name. I also thought it was appropriate because after changing hands, throughout the time, it's changed hands quite a bit since that time. But it recently came back to St. Louis and is now produced by Luxco, a St. Louis company.
Oh, really? Okay.
And it's also, much like our guest, Andrew, tonight, this bourbon, that bourbon itself in that bottle has come from Kentucky before it was in St. Louis.
Okay.
I thought I
And
tasted
it's
Kentucky.
and in fact, that bourbon in that bottle was probably barreled while you were still in Kentucky.
Oh, really?
So,
All right.
Well, it makes sense. Yeah. Very
Good
cool. I
deal.
love it. One thing I will say, though, is we broke our trend of the past few weeks, and this one's slightly weaker.
Yes.
Every week for about 4 weeks, they got a little stronger every time. I think we were up to about, 125 proof
I think
last week?
I think it was like 117.
Yeah,
something
okay.
like
So
I
that.
thought you guys
good.
were just
Kinda-
going easy on me.
No.
Yeah,
Maybe.
he was, it was getting up there.
I like barrel proof. I like barrel proof, so I just kept upping the ante.
Yeah.
Fair enough.
This is really smooth. It's good.
Yeah, that's good. Yeah. Well, I do. We have a couple minutes left. The last thing I want to talk about. So we spent some time talking about these venture-backed companies. Obviously, they're very important to the ecosystem. Everything's going on here. There's a lot of companies out there though that either haven't raised money yet or maybe aren't even trying to. And I wanted to see, is that part of this that you guys are watching at all, or kind of what do we do to keep that side of things going as well?
Yeah, I mean, so we are probably not as active, to be honest with you, in that space as we are in the true venture sector, but we watch it. And so, like, one of the things we talk about in the report is, the statistic out of the Labor Department on new firm births, right?
Okay.
Something that's tracked all over the country. Every metropolitan area has it. St. Louis has really good numbers on that.
Okay.
Yeah, I mean, the number of new companies being born in St. Louis, it has surpassed its pre-2008 peak.
Really?
That's a great thing in and of itself,
awesome,
right, for an economy. And I think, by the way, that's especially good for us because we're not actually growing. Like, we don't have new people moving in at this point. So that's a really strong number for us. But what's really cool about it is when you break the numbers down, a huge percentage, a disproportionately high percentage of those companies in St. Louis are really small companies, right? So, and I mean, startups.
Sure.
Right? And that doesn't mean they're all tech startups, right? They're not all in T-Rex, they're not all in Cortex. Some of them are, mom and pop businesses on main streets. But we've got a really healthy ecosystem in that area too.
That's great. Yeah. Well, I know, Eric, you and I are both, we haven't raised any money yet.
Yes.
Not going to close out the possibility at some point, right? But I mean, what are you seeing in that kind of side of things? What could we be doing better, or are things working?
Yeah, I think they are. I think we could certainly. I think in the city there are things that we could do bureaucratically speaking with the licensing stuff that could be a lot easier for startups and like making that process much easier, because I found that quite daunting when I was starting a company. Additionally, I think smaller companies that have been around for a little while, like you and I, we can help mentor people here in T-Rex. And then additionally, we can volunteer for some of these organizations that are working inside of our high schools, like NIFTY and DECA and Junior Achievement.
Cool.
Like going out and actually working with kids so that they can see that this is a possible thing.
Yeah. And I think coming back to your point about we're not good at talking ourselves up, I guess you could say, or we're bragging on ourselves. I mean, I think that's, especially for these really small startup companies, I mean, that's a big part of this too. I mean, that's something we try to do here is, we highlight obviously people that have their own more established and bigger organizations, but also really fledgling startups as well to kind of get them some attention. So, sharing on social media, buying from these companies. I mean, I think those are all things that we could be maybe focus a little bit more on. Are either of you aware of anything that's really catered towards promoting those kinds of businesses in particular? Anything that kind of, so I'm trying to think. I mean, that sounds like there's a big need there in particular. Yeah.
Yeah. I mean, my mind immediately goes to places like T-Rex.
Yeah.
Of course. Sure.
Just being in a space like this is great advertising.
Oh,
great branding.
For sure.
Right, for those companies, because you're gonna meet some interesting people here.
Yeah, and I mean, I think about the other co-working spaces around town as well.
Absolutely.
I mean, we have a second location down at the Hive of 44, which is not really necessarily a startup type of place in the traditional sense. But if I think about it, defining startup as just these small companies, it very much is. And I think, as you say, I mean, just getting together. I know even when I was getting started, just having other people to talk about and vent to, that's what Bourbon Friday has become in a lot of ways, right? People to hang out with and just kind of talk about what's going right and what's going wrong.
Right. And for me, it's super helpful if I come up with a problem that I just have not encountered before. What could be something as simple as payroll. But you have 100 different ways that has been dealt with in this building that you can talk to different people and figure out what's really right for you.
All right. Well, I'm going to talk to you after the show about payroll because it's always been a pain in the butt, to be completely honest. So, all right. Well, I think we're about out of time. Eric, Andrew, thank you so much for coming on the show today. Definitely appreciate you guys doing this. For those of you watching, we do this every single Friday. The Bourbon Friday event is open to the public. Please send us a message if you'd like to visit sometime. It goes from 4 to 7 p.m. on Friday afternoon here at T-Rex. So I'd like to thank T-Rex for hosting us. I'd like to thank EQ for streaming our show every single week. I'd like to thank my business partner, Vanessa Lobo, who's behind the camera producing the show for us with Connect Marketing. I'm Nick Niehaus. Thanks for tuning in, and we'll see you again next week at 4:30 for the Bourbon Friday show.